War Room ICS session, intense coaching session number 26, trainee Alan Vergara. Here we go. How are you, Alan?
Hello.
Hello, how's everything?
I'm trying to connect my. I'm not sure. Hold on real quick. Hello?
Yeah, can you hear me? I can.
Okay. Yeah, I can hear you
Perfect.
now.
Yeah, beautiful.
Yeah.
How's everything? How are you?
Good.
Good?
Yeah. So I guess so. I'm not getting the. I don't think I'm getting the 100% today.
Yeah, we can wait a little bit more. I mean, I will check with you our price target for gold, which I shared so far with the War Room already. We already know what we want to. As usual, you should be looking at the SP500. Do you see it?
Yes.
Okay, perfect. So we are in this Trend Fibonacci. I have explained we have this big rejection of sellers, this area. Okay, let me change the color. I had a blue. It's better.
Yeah.
There you go. We have this rejection. So we have a pushed all the way up from the 3186. But the key level that, as again, have been protected several times is the 3220. 3,220. I've said this many times over. This is a crucial level for us. You have see here the break, okay? Protection again, a couple of times. You see how prices touched below and came back. This was a very important threat. Again, went up one more time. So you have 1, 2, 3, 4, 5, 6, 7. 7 time being this, the last one was really nerve-wracking for a lot of people. But because of the vehicle we're trading, I repeat this many times again, the vehicle in how you invest in products, how you invest in assets is crucial. For example, one quick idea is that those that buy gold are much better just owning the gold if they want to have gold rather than trading it. Because once you own it, you can put it in your house, in your vault, and that's it. There's no margin call. For example, if you're trading futures contract and things go the other way around, there's no psychological pressure. So there's a lot of advantage in understanding when you decide to invest in an asset, what's the vehicle that you're going to use. We have decided to always go with options because we're not going to suffer margin calls. No one's going to knock your door asking for more money because you hit a margin call. They're not going to be surprises like in Europe with CFDs. Plain and simple. Everything has to happen by the time the market open at New York time. So whatever happens during the extra game, which is past the closing of New York, doesn't matter. You will be safe. Okay. So just as a reminder, I have things on this recording on ICS number 26. Now, once we have that, we can see all this push will give us this range that goes from 3118 all the way to 3250. Right here, we have an estimated, we have 60, 20, 80, 120 pips. Okay. So from this level all the way up, we have 60 here, and then we have a total of you have here to this level 60, and then 110 points. That's what we have here. Okay. Then we see that this projection comes this level, which is the 50% of Fibonacci. Usually the preferred levels would be 38.2, 61.8. We know that, but it's just what the market is giving us. So the rejection, where we have the big bounce, moving forward, moving up to new highs, is from the 50%. So we take that level and we have the final target, 3,320. Now, a second point to understand, very important in this analysis and how we study Trend Fibonacci, is something I have mentioned several times. This level here, these several candles that we have, they have activated the Fibonacci. Trend Fibonacci now is activated. Why this matters? This is very important for your studies because now prices, and let's always be aware of this, can retrace all the way back to 23.6%, which by a coincidence is, again, 3,220. Okay, but they cannot close and open below the 23.6% because it will deny the projection. So we always have to pay attention. Now, as a consequence, we can see that how prices keep pushing higher. And now there's this formation. So I presume my probability indicates that I would love to see a retracement into the 3260. Why not 3250? The 50 level for me will be crucial because now as the level 3220 was protected here, this level has to be protected and then push to the end. And this is where I will expect this to give us an exit at least a 50% profit. If not, if we cannot attain the 100%, well, I will have to call it a day at 50%. Not our target because we are looking for triple digit, but like I said before, 100%, 50% still decent. Not what we want, but we have also to understand that I can have all these correct many times over, but the market may tend at the end to do something totally different, and we must protect ourselves. Got it?
Yeah.
Perfect. Okay, now let's take a look at gold. Gold has been, for us, has been good so far. We do have a decent profit, but based on all the information that we have, we certainly can see that there's available price range. These are the levels I have based on this momentum indicator that I use. We go all the way to 1517. And as I said before, 1522 is crucial. Crucial because it has to do a lot with the Fibonacci. And we're going to take a look. Let's take a look based on this. Here we go. And I will explain step by step how I got to this conclusion, which I had a couple months ago, probably 6 months ago in 2019. I got it right. And let's begin. From the monthly chart, we take Fibonacci. From this low to the initial high. I think you can see it clearly here. What is this?
The 50 EMA.
Correct. Let me see. This is the 20. Let me change it to the 50. 1 second. But what you have, you have the Fibonacci and you have the EMA working together.
Yeah.
There you go. Beautiful. So you have the confluence. Remember? So exponential moving average plus trend Fibonacci equals confluence. Touch confluence gives you certainty to take a trade. And when you're certain, you can do a lot of things. You can leverage your position because you have all the evidence indicating that it will make the move. As you can see here, look what happened. It goes all the way to our favorite Fibonacci level, 38.2. And there's a massive confluence. And 2 months rejecting that level. The price is talking to you as it rejected going lower than 1,275. This happened during 2019. Of course, now what we have? We have the Fibonacci expansion, which goes from this level. Let me just remove this. Goes from this level. Okay, and then we project. So, how high that was? Pretty simple. I remove the pencil, go to shapes. One more time. There you go. Okay. Again, projection. And I take it from the 38. I can do this to have it better. There you go. From the confluence, okay? With the 38% Fibonacci, there you go. So at that time, using this simple technique on a monthly chart, and again, this is why I always encourage you and everyone in the war room, every member, to always, when we're trading these assets and when we're trading looking at equities in the US, start on the monthly because you want to make money. You want to be there when it's going to make the percentages like the 50, the 100% on your money. And look what happened. From 1,275, almost $200 up. $200 up. Imagine that.
Yes.
And that happened after you have this confluence in 1, 2, 3, in 3 months.
Yes.
You no longer need to position yourself for pennies, for cents on the dollar.
Yes.
You're positioning yourself, understanding, and I know you always have the question, I get this question for other members. So how long is it going to take for that move to take place? Well, you do an analysis based, again, on the same information that you have in front of your screen. The Trend Fibonacci, it's telling you basically, if this is the range, 190 points, another $190. It takes 1, 2, 3, 4, 5. You're estimated it's at least minimum of 5 months.
Yes.
Now, after we got in this confluence, it just took 1, 2, 3, boom. That's it. Less than the time that, based on the pattern, you already know. So this Trend Fibonacci also gives you the opportunity to calculate how long it will take you based on the time frame, because remember, we're working on monthly. Based on this time frame, how long it will take you, because every candle is a month.
Yes.
So you do know it's 5 months. Well, of course, if it happens before, perfect. But now you can also have a timeline, and that's the certainty that it gives you as a tool.
Yes.
On price rotation, it's a little bit different. It has the same components, but it can take more time because you're playing also in a range. But this is what we have. Now, where do we go next? Simple. And on the fundamental view, I want to add something. And I know you've been following Tom McLean. He said something a couple weeks ago, and I will look it up. Let me switch real quick to my screen. Because Tom said something that I want to bring to this presentation, this training. He mentioned that the commercials, the people, the ones that really need gold, the ones that really has a purpose with that gold, not speculators, not retail traders. Fine, Tom. They are net sellers. And that means that the real money, the professionals, they're short gold big time, which actually makes a lot of sense in why we have these rejections, these massive rejections on gold. Let me just, here you go. Do you see it on the screen? Commercial traders of gold futures. This was on January 6th. I'll probably also share this with the war room right away. Commercial traders of gold futures, big money, institutional money, the guys that really need the commodity, those who use gold in their trade or business, e.g. miners, moved last week to the largest ever net short position in history. And that's the Commitment of Traders report. It's an official report on who is buying, and the big boys, they're short. So they're actually using all that influx, those almost 90, 100, well, actually $150 up in gold, to take out all their positions and prepare their short positions. That's what they're doing. That's what they're doing. Okay. Of course, we always have to pay attention. We always want to be, I'll probably just have to change it. Quick look at this and put it. So I want, as a fundamental idea, remember, same the way that we buy stocks following insiders. Well, the commercials in futures trading, they are the insiders, and they're saying, you know what, I'm short, like I'm very big time short. Okay, so that's something to keep in mind. The last thing I want to add, let me go back to our chart to have gold. It's the understanding of, on the long-term view, again, just using Fibonacci. I'm going to share with you 2 Fibonacci's to have it in this video. Number 1 is the Fibonacci all the way from 1928 all the way back sometime between October 2010, October 2011, to be specific. That happened on September 2011. Okay, all the way to the low that we know on December 2015 at $1,046 for gold. it tells me that the 61.8% reverse, because this is not the trend, okay? The trend is, the trend will be, let me bring the pencil, the trend will be this way. What we're doing here is reverse, okay? Reverse Fibonacci. Okay, it's telling me that there's a massive resistance so far at this price, this level. Now, point of interest is all the price is moving into this middle rotation, which goes from 1593 to 1490. Okay, so that pretty much is about $110, 110 points in gold. So no surprises that we can come back easily to trade at this level, 1490. Right now, let's go and take a look at what is happening on the reverse side. So we have this information, and now from the last pullback, I'm going to take it all the way up. I want you to see this, because remember, this is the range. These 1,275, 669 to this level. This is the current excess. What that means is that gold right now is trading within the Fibonacci range that we have, which is 1,380 to, of course, this 1555 level. So where can we see gold going? You already know that. Gold can go to the 38.2 easily. It can come back to the base. But before it does that, of course, there's massive support, because all these levels, okay, all the volume related to these candles on the monthly chart at 1,487. This is why I said, if, let me just clear again, if we break, which I'm not denying, I'm expecting this to happen. When this happens, the next, if prices open, close and open in this case, close
1522.
Yeah, below 1522, then we'll see this, because we're still inside the Fibonacci. The trend Fibonacci has not been activated. The question, of course, will be, where is this Fibonacci taking us? Well,
where's that 1522 coming from again?
Have another analysis. Let me share with you. Let me take this one. Let's move to.
Oh no. Okay.
Yeah, you see it? Okay. Also daily. We can be in daily. There you go. You take here. Do you see it? Do you see it here?
Yes.
Okay.
Yeah.
So
15,
also
16.
on the daily, yeah, it's the same. Just give you an idea, but I prefer to have the monthly chart to have a better, because it's easy for me to take it from this pullback, which is the last trend Fibonacci.
Okay.
So I take it from this level to this here, and there you go.
Okay.
You see all the potential. And of course, if we take here, there you go also, you have 1520. Because, yes, because you see here, this is October 2019, November and January, well, December, this area, the 1520, 1525, it acted as resistance, and based on memory, what was a resistance now will be a support. So this is the key support here. And also by a coincidence, sort of a coincidence, the open of January's candle in 2020 is 1520. You see that?
Yeah.
So that's what we're working with right now. This is what we have to have on the table, and this is the view that we have on gold. Of course, as we get to 1520, that will give us a push, and it will continue. And this is the last thing before we jump to your observation. I'm gonna take a look at our friend GDX.
Okay.
Let me go back, please, and you should see it now on your screen.
Yeah.
Perfect. So in GDX, right now, You see how although gold is relatively trading a little bit higher, marginal higher, well, GDX is going nowhere, right in a trap. Okay, and I already noticed some technical analysts, veterans, they're already talking about 26 on the table. I don't count those yet. Okay, I will be more inclined to say 27.20. And here we go. Look at this. Very important. Look at the 4-hour chart. We have prices trading below the 50 exponential moving average.
Yes.
You see? And this right now, it's opening.
What does that mean, though?
That means pretty basically, look at the volume structure here, the volume profile. Look at where we are. The volume profile combined with the point of control. Okay, point of control. Think about like the gravity, your center, your nucleus. It's telling us that once price is trading below the 50 exponential moving average, we're favoring shorts. And that means that the attack is coming, and the most logical stop will be 27.20. That's another 5% down estimated on GDX, and this will make us click 100% in our money.
Oh, okay. Yes.
Now, of course, add to this, we have volume, Hawkeye volume package, short sellers are in control. Momentum in the short term, look at heat map and look also roadkill. This is all indicating doors are opened for us to see lower prices on GDX, which is a reflection from the gold market.
Yes.
Excellent.
Yes.
Let me clear this. Let's look at the daily. Where's the daily so far? Obviously, we found support here. Not something that we have to be surprised. But look in the sense. One more thing I want to point out. Look at the levels of volume. Okay. Twing. Big sell push, and look at what this yellow means. That's an unusual.
Yeah.
Okay. Let me see if we can take a look at weekly, if weekly is adding any changes. Weekly is adding nothing so far, same old. But you can see easily how you can push here 2770. This weekly bar, of course, it's what it's telling us is that prices, professionals want prices below 2880 on GDX. Depending on the close, depending on the next 2 days, we see this. It indicates that professionals want prices to trade below the 2820. So that's something that we have to keep in mind. And one more thing I will do just to give us a map, Trend Fibonacci, 2740, it will go all the way down. 2740 here. So we're not too far. The end, of course, will be the zero level, 2620. But as I mentioned, I'm not counting on it. Okay? So this level here, and we will be out. Perfect. Now, let me take a look at what you were mentioning. Okay, so you're looking at DS, right? DS. First thing first, we're going to put DS on the watch list. Let me answer this message. There we go. Okay, let me clear all up. And okay, so this company so far it's minus 7.6%. Let's take a look at the 5-year commitment. Let me put it on the screen. We have it. 5-year, it's still, we're coming all the way from 240 to 50, almost 100%. Still 100% in the last year and a half. High 783, rotation 619. Next earnings, March 11. Okay. Let's go to the full chart. March 11. Okay, here we go. Interesting. It's recovering from this double bottom back on December 24 again. So this is a strong support, 354. Okay. So this is something is sticking up higher. It's very important. This is on the weekly. Okay. Let me take a look on the monthly. See if we see something that is of interest. Oof, that's quite interesting. Point of control, this level. We can say that we have a double bottom. So you can do price rotation here. There you go. Price rotation, this level, of course. And it will take you to 549. So from this level, you're looking at a 37% appreciation. If it breaks there, of course, then you look into the closing. Another 44. That will be a total of 80 to 90%. Momentum seems to be on the bullish side. Okay. We have a little bit of sell here. So on this one, insider buys. Let's take a look at insiders. Check those purchases with you. Let me see. Okay, the last one was on December. Was at 373. It was 15%. So that can serve as the balance. It's a little bit too low. I have to admit, it's a little bit too low for us to really pull the trigger. I will say there are better things on the table than that one. Yeah, there's a better thing on that one.
Let's pass that one.
Yeah, one that I wanted to bring back to the table. I'm still working on the Wells Fargo. I still think that for Wells Fargo, we need to wait. Also, I don't know. Did you read the Morning Brew where they were talking about the corruption of the Wells Fargo directors?
No, I missed that one.
Yeah, I was reading that, and that actually put me back on remembering what we discussed.
To short it would be a good opportunity to short it.
Yeah, exactly. But we need a major catalyst that will put that company on a sell, stuck on a sell. So we still have to wait a little bit. Expedia, I still think that Expedia is not going to have a good 2020. Doesn't matter how hard.
Yeah, no.
It doesn't matter if they can or pay the CEO to move out, to get out of the company. Let me go and
the retailers they disappoint their earnings. Kohl's, JCPenney, and I think
but they're already toast. Those companies are already toast.
Yeah,
they're already all news. There you go. Look at it. Remember this one? So we started looking at it. This is Expedia put on April. We started looking at it at 364. Right now it's 295.
Yes.
Open interest 1,242. I'm going to resend it to you so we retake the conversation. Okay. Share that with you. Also, I think this one will need us to wait for the next earnings will be on February 6th. They missed the last one. They missed the one before that. They missed the other one. Jesus, they don't do
When you say they missed, that means that they didn't.
meet
Uh,
expectations. Yes.
oh, okay.
I think the last time they meet expectations was
Uh-huh.
October 25th, 2018.
Wow.
A year and 3 months. Next earnings is
Mm-hmm.
going to be on. I mean, the last two they missed by almost 30%. But before that, on May 2nd, 2019, they
Mm-hmm.
missed by 80%. And then they missed by 89%.
Mm.
Not good. Not good.
Not good at all.
Not good at all. So the earnings is going to be on February 6th. So I want you to prepare that, put it on your calendar. I will put your reminder as
That's where we're
well.
gonna get. That's where are we buying put
Yeah.
for
Yes,
Expedia?
we're gonna buy the put, but we want the put to be cheaper. And
Right.
the thing is that the stock is still trending higher.
Right.
And that's because what we will need then is for us to reach a level, let's say that somewhere around, ideally I will prefer is to actually have the S&P already at 3,300, so surprising everyone, okay?
Mm-hmm.
And then
Mm-hmm.
we go into this put, because I bet you this put will be around $1.50. Very
Mm.
attractive. Because what we
Yes.
want to do, we're positioning ourselves. We
Mm-hmm.
know that this company can go a little bit higher. We know we have here in the monthly $117. It shouldn't be a
Mm-hmm.
surprise to you, okay?
Yeah.
But then is this put. This is the one I'm attracted, because we know the problems. We know the problems. Tomorrow, Friday, we're gonna go with ICS number 27, and we're gonna
Mm-hmm.
talk also about another victim, because we're gonna have
Mm-hmm.
another victim. Our good friends of Boeing.
Oh yeah.
Yeah, and don't forget the last crash, the Ukraine
That
incident.
that was a miss. That was a missile attack, according
Yeah,
to the.
yeah, but BA was already on the news. It's like
Yeah.
nothing, like nothing. Why didn't happen to an Airbus? Why it has to be a
Yeah.
Boeing plane?
Yeah. Yeah. Yeah.
But also those guys are toast.
Yes.
Boeing is going down. We have to look. Yeah, we have a put here. We're going to take a look. 275. Look at it. This is the February 300. It's not a bad
Mm-hmm.
one.
Mm-hmm.
It's 5,300 on the open interest spread,
Mm-hmm.
7 cents.
Mm-hmm.
Okay, volume. But what we find here is that we were tracking this one. 132. Yeah, 132.
Mm-hmm.
It went up. Huh? No. No, at $4.30. $4.30, and it's already
Wow.
275. So
Yeah.
it has dropped. It has dropped what? 30 a dollar, a
Mm-hmm.
dollar 55 cents. What a
Yeah.
massive drop, right?
Yes.
You see? And again, you can see all these live examples that I studied with you. Why I made a rule. I don't buy options above $2.50. I don't
50.
do
Yeah.
it. There's a reason. This is the reason.
Mm-hmm.
Simple as that. Here's the evidence. So what can happen now
Yeah.
is, of course, we have a couple more minutes on this session, but I want to take a quick look at Boeing. Nothing good is happening. This whole thing of recalling the stop the production, check this, check that.
Mm-hmm.
You can put a mask on your face. If
Mm-hmm.
you have an infection, the infection is going to keep eating you.
Yep.
Putting a mask on your face is not going to clean the infection. That's the
Mm-hmm.
issue. Look at how
Yeah.
it's like a shy candle on the monthly, shy candle,
Mm-hmm.
but it's an
Mm-hmm.
inside candle. What is
Mm-hmm.
telling me that either we pop here, oh, this is it. We're going to 284. And
Mm-hmm.
judging by how things are looking for this company, this can also be another FedEx
Mm-hmm.
victim. The way FedEx just missed massively earnings, all the problems they have, and they dropped 15%, which made a lot of the puts options triple. I shared that with you.
Wow.
So
I don't think I traded FedEx.
no, we didn't trade FedEx because I was stuck in other positions.
Oh,
But FedEx was a sure thing to go down. It has been. It was.
yeah.
It was a short trade in 2019. Now, as you
Mm-hmm.
can see here, we have a relatively more benefit positioning ourselves short by simple mathematics. The ceiling here, as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. A year defending this level, the 368.
Mm-hmm.
Therefore, this month is crucial for us to understand what to expect. Okay.
Mm-hmm.
And that's what we have to have in mind. This is the level. Okay.
Okay.
Very important. Just give me a quick second. Okay. 1 second.
Okay. Okay.
All right. Okay. Thanks for waiting.
Mm-hmm.
Okay. So as I mentioned, this is just a very timid candle, not doing much. And you see it also, look at this. Let me zoom this because I want you to look at it. I make two observations. Observation number one. Look at the wick and look at the levels also.
Mm-hmm.
So you have this level and this level here protected. And see something very important. On top of that, you have the point of control, the red dots, 355. That's a massive resistance right now. But previously, you have 1, 2, 3, 4, 5, 6 months within 2019 where this level of support now is a massive resistance. This is why prices, although, remember, although the SP 500 is rotating at new all-time highs, this is why Boeing is going nowhere. This is a massive sell signal for us to be positioned.
Yes.
The fact that a stock cannot break through in the presence of new highs for the index is a bad thing. So it's toast. And the second thing to close this session, let's take a look at volume profile. So here you have this massive histogram. Okay, this is the protection, and then you have this level. As soon as prices close and open below this, Boeing destiny has been sealed.
Gone. Yeah.
It's over. It's absolutely over. Okay. We'll go deep into this. We'll take touch other points as usual. And as usual, as we get to Saturday again, we go back to you drawing everything, using all you have from searching, opening, applying Open Insider, using all the tools you have. You will do the practice. Okay.
Okay.
As usual. Thank you so much for your time today. This was ICS number 26. 26?
Thank you, Jose.
Perfect. Thanks to you. Okay. Appreciate the time.
Thank you. Appreciate you as always.
Talk later.
Okay. Ciao.
Ciao.